This segment will look at the use of standard costs to calculate material variances. Standard cost variances help us break down variances in different cost aspects of units produced into their price variance, or how much of the variance is caused by the difference between the actual price and the standard price, and how much of the cost variance between budget and actual material cost is due to the quantity variance, or the difference between the actual quantity of materials used as compared to the standard quantity of materials that should have been used. To calculate those variances, it's easy to view it in this little diagram form. On one side of the diagram, we're calculating the actual quantity of materials used times the actual price. In the middle of this diagram, we have the actual quantity of materials used at the standard price. When we take the actual quantity of materials at the actual price paid and compare it to the actual quantity of materials used at the standard price, we calculate the price variance, because the only difference between these two amounts is the amount of the price. This is calculated using actual price. This one is calculated using the standard price. Both of these numbers are calculated using the actual quantity. We can then take the standard quantity allowed times the standard price. The difference between the actual quantity at the standard price and the standard quantity allowed at the standard price is the quantity variance. The only difference is the quantity. Both of these are calculated based on the standard price. The standard price is the amount that should have been paid for the resources or the materials that were purchased. The standard quantity is the quantity of materials that should have been used for the actual number of units produced. So here's an example. ABC is making products with the following information. Direct materials standards are to use half a pound of materials and pay a standard price of $20 per pound, or a standard material cost of $10 per unit. During May, ABC actually produced 3,500 units, and they actually used 1,800 pounds of direct materials. Their actual price paid was $21 per pound. So let's compute the material price and material quantity variances. Starting on the left side of our diagram, we are going to calculate the total actual cost, which is the actual quantity of materials used at the actual price. We actually used 1,800 pounds and paid an actual price of $21 per pound. Our total actual cost was $37,800 for our materials. Here in the center, our actual quantity of materials times the standard price. We actually used 1,800 pounds. We should have paid $20 per pound, giving us a $36,000 flexible budget amount for materials. And finally, for the total standards, the standard quantity allowed for the number of units we produced is 3,500 units with a standard of half a pound per unit. The standard quantity of materials allowed for the 3,500 units produced is 1,750 pounds. At a standard price of $20 per pound, total standard budget of $35,000 in material costs. We can now calculate the difference. The price variance is the difference between the actual cost and what the flexible budget says our cost should have been for our actual quantity, $1,800. It is unfavorable because our actual cost were greater than what our flexible budget says we should have paid for using 1,800 pounds. We paid more per pound than our standards say we should have. Now over here we can look at our quantity variance. $36,000 based on our flexible budget, and our static budget was $35,000, a $1,000 variance. That is also unfavorable because the flexible budget says we should have used 1,800 pounds at $20 per pound. The standard says we should have used 1,750 pounds at $20 a pound for producing 3,500 units. It's unfavorable because we used more pounds of materials to make 3,500 units than our standards say we should have. Our total variance in material costs was $2,800, which is the difference between our actual material cost and what our flexible standard budget says they should have been. That $2,800 variance is due to $1,800 in a price variance, we paid more than we should have, and a quantity variance of 1,000 unfavorable because we used more than we should have. So this directs our attention to not only look at the price we're paying for materials and analyze whether we're not paying the right amount, and to look at the amount of materials we're using. Maybe we're using more materials than we should be.